Welcome to Your Money Today, a unique look at financial, geopolitical, and other news relevant to you. For 45 years now, your host, Chris Temple, has provided his one-of-a-kind insights and advice on the markets and on our world. Whatever the subject, he calls them like he sees them. Roll up your sleeves with Chris as we get into today's program.
Well, folks, welcome back. And today I'm joined by an outside special guest, Desmond O'Kell, who is the president of Enterprise Group. They're a Canadian-based energy company in northwestern Alberta area, beautiful province, which I had the privilege of many times over the years visiting. And Des, I'm glad you could join me today to talk all things energy and especially Canadian energy.
Yeah, for sure. Well, thanks for the invite, Chris. Yeah, looking forward to today's discussion.
Well, you and I, for a lot of years, have compared notes in good times and bad times, desperate times. Now it's pretty, relative to a lot of the years of Darth, especially in Canada in the oil patch. It's been a relative land of plenty. Certainly for you guys, your share price is up at one point over tenfold from where it bottomed a few years ago. You guys survived the brutal bear market in Canada, so congratulations to you and Len both. Folks, we're not going to talk a great deal about Enterprise specifically today. I'm going to have Des back not many days hence, and we're going to give you an updated profile on what still pound for pound is a great company with a great story as it serves the Canadian energy industry and equipment makers and things like that. But just in case he or I make anything that would be construed as a forward-looking statement or some such thing where Enterprise is concerned, I've had their slide on the screen here to remind you that Des and I are exuberant about what we believe. We're realistic, I think, too, though, about the world and about the economy and about policy and stuff like that. So anything that would reflect specifically on Enterprise makes, just be aware that we could have a couple of forward-looking statements here and there along in our discussion. But that said, before I hit the record button, Des, I asked you if you'd seen this. Mitsubishi, and this is a theme that's going to be recurrent more and more in the months and probably years ahead when it comes to a whole lot of resources. Mitsubishi, which I know because it has now essentially a big brother relationship and an offtake agreement with one of my favorite lithium plays over the years over in the province of Ontario, Frontier. They are out today, just was released. I saw the headline minutes before we got on here, talking about an $8 billion purchase of a company called Aethon, which I believe is a private company with a bunch of shale assets, and among whose owners is the Ontario Teachers Pension Plan. And I bring that up to kind of start the conversation with the idea of this. And here in the US, of course, there was a time when we were told that the previous president, Joe Biden, was going to outlaw fossil fuels, do away with it. We're going to have a windmill on every roof and a solar panel on every roof and an EV in every garage and all this. And instead, during that time of his presidency, U.S. production hit new record levels, which we have seen decline now recently for different reasons, a little bit. And up in Canada, I mean, the epitaph was written a lot of different times up in your country as well. But the fact still remains that going forward, the entire world needs ever more energy. We need it in the US and Canada both. And there are people out there who realize that good assets are hard to find in a world that's going to start to see down the road, I think, more scarcity of a lot of these things. So in Canada, you've got, in relative terms, an industry for energy that is significantly less mature than the U.S. And are you seeing any moves yet as Canada's energy sector has regained some health recently of outside people wanting to take a chunk of it?
Well, the general answer to that for certainly recently or in most recent years is no. In fact, over a period of the last decade, in fact, in that time frame about 2016 to 2019, we saw many of the foreign-based energy producers that held reserves and production in Canada left, and most of them were involved in the oil sands.
Right.
So we saw Total leave, among others. They just I think there was the regulatory regime that certainly was surrounding the moves that Trudeau was making in his early days of being the prime minister. It set some tone, and we saw much of those foreign-based producers here in Canada one by one leave, and they were being, I don't want to use it as a complete general term, but Canadian Natural Resources, our CNRL, our largest energy producer here in Canada, picked up much of it. So, it was the Canadian large players that were picking up these pieces that were being left, by these foreign players. Now, that was a different era. Where we are today is there's much to be known about our reserves here in Canada, not just the oil sands, but the fantastic nat gas deposits
Yeah.
that we have in Canada are now in contrast to what you're seeing with the U.S. Shale plays and so forth, which, like you just said, the Canadian landscape is a little less mature than the American landscape. And what I feel, and many analysts that we find here in Canada that are knowledgeable about this landscape, is that we're going to start to see some certainly American producers looking north to Canadian assets because of the opportunity, the inventory opportunity to keep production moving along. Just like you said, it's less mature. We've got a few financial advantages going this way. We have a tremendously discounted dollar, although we've seen a little bit of strength between the Canadian US dollar. I think that's more of the Canadian dollar being weakened. Would that be correct, Chris, in the latest couple of months?
I think that a lot of it has got to do with the fact that when President Trump came in, there was that knee-jerk reaction right away, which is somewhat counterintuitive to the book on him, where the U.S.
Mhm.
dollar, if you look at the index, it was up to like the 107, 108 area. The loonie was what, $1.44 or 45. Uh,
Mhm.
and now things have reversed. And yeah, I think it's more so from U.S. dollar weakness than
Okay.
Canadian currency strength so far.
Yeah.
That said, one of the things I'm looking for down the road a piece, if everything goes well for you guys up there, is I think that a longer term play potentially is going to be that Canada's currency, Australia's currency, for example, perhaps a couple of the better South American ones where you've got economies with substantial resources, I think are going to do better because inevitably we're going to get into a world where the control of and profit from commodities is going to be more and more important. We all know that, speaking in general terms, commodities have had a long bear market compared to financial assets, as they're called. And
Right.
a lot of people have seen the charts that by some measures, commodities have never been lower in price. Energy stocks, there's ridiculous bargains in both the U.S. and Canada of really good, solid, profitable companies, great reserves, great cost structures that don't get anywhere as remotely near the valuation of some of the nosebleed AI stocks and big tech and stuff like that. So I think that's a story that's going to come, and I think that maybe the relative strength in the loonie in the recent past, where most everything has appreciated in one way or another against the U.S. dollar, a little bit of that might have to do with idea, which I have, and I'm going to want to ask you more about this, that, we know what the worst is, we hope, from Prime Minister Trudeau, and will now Prime Minister Mark Carney be less bad? than some
Yeah.
have worried about. I know that you've pointed out to me more than once, as have others, that Carney, to a great extent, was the evil genius behind the throne. In some instances where Trudeau's government was concerned, he had a hand in some of this, but he and President Trump also have a history, which some
Hmm.
are aware of, and they might fool all of us down the road in building what could ultimately, and I think this is part of Trump's own big vision, could ultimately be, I think, what Premier Ford in Ontario calls Fortress Can-Am, to have this major, much more integrated and close Canada slash U.S. colossus, where, among other things, as you intimated, where the possibility is with energy, U.S. producers who are sitting on some healthy finances, but mature shale plays and other plays look up to you and say, "Hey, we can extend our lives by X if we
Yeah.
look at some of these assets because you've got incredible geology, incredible resources in Western Canada, especially."
Hmm. And yeah, that lends, back to where we were going with this, which is the opportunity for those very, very, sizable players that are, running out of some inventory in your domestic market in the U.S. And they're going to look towards these less mature assets that we have here. They've been re-rated recently. The Geological Association has re-rated Canada's nat gas reserves. They're now recognized to be, six times what they were defined as before.
Wow.
So that's the recognition. I think everybody in the industry knew this, but the fact of the matter is that it's now a formal. It's been addressed with more modern reserve techniques and measurements, and it's a massive number. I think it's the fifth or sixth largest nat gas reserves in the world, right up here in northwestern Alberta, northeastern BC. But anyway, the opportunity for these American players that are running out of inventory, looking north. We've got a very, very desirable exchange rate here, and you're right. On the other side of it, you talk about the tech companies that are getting these eye-watering valuations. Your financial landscape in the U.S., they pay more for cash flow than our Canadian market. So some of our opportunities in Canada, the producers to be maybe taken over, there's an opportunity because their valuations are much weaker than others. Having said that, Canadian producers, you described, the downturn that we were in it lasted about 7 years from,
Sure.
early 2015 to middle of 2021. These Canadian producers did nothing but just continue their production. They paid down debt at record pace. They were returning or buying back shares. So they were returning as much to the balance sheet, fortifying the balance sheet. The Canadian producers now have the best balance sheets in the world across any industry, any sector. So they're very strong, but they're just not reflecting the valuations that certainly some of the American peers are having. So there's an opportunity to come to Canada, and so I think that's so. Back to your question, I think that is imminent in the coming few years. These opportunities to consolidate into some of these Canadian production plays.
Well, I agree. And I've said more than once with my bullishness, generally speaking, longer term on commodities, that it's going to be the commodity producing countries, the commodity currencies that are out there. The rand in South Africa, maybe less so these days, but certainly the Australian dollar, the Canadian dollar, et cetera, are going to have their day in the sun again because that's going to become more and more the focus in the world. And I've said more than once, as you know, and I'll continue to say this, that for U.S. investors who are looking north for these kind of opportunities. It's an especially juicy time because if you believe, as I do, that we're going to see the US dollar continue to weaken, it's not going to be a bloodbath. We're not going to lose our status as the world's reserve anytime soon, maybe not even in my lifetime, but it is going to weaken more just because of the sheer volume of the debt and all of the other macro factors that are going to take the dollar down versus other currencies. And if Canada benefits from that, then if you're a US investor today, looking at basically a 30% give or take stronger currency, you're buying discounted companies to start with because the valuations are less than US peers. You're going to get a boost in the currency and you're going to be selling stocks down the road when they peak that are much more valuable in Canada, and you're going to get more of those dollars back with the cheaper US dollar down the road. I mean, to me, it's a no-brainer. But anyway, I want to get back into
Mhm.
more of the nuts and bolts and some of the regulatory things and some things we should be looking for. For all of the faults of the Trudeau government and keeping pipelines from being built, and really, from your guys' perspective in Canada, you've kept yourself too hostage to one customer, being the US. And now, thanks to President Trump, there's more of a desire, at least at the moment, who knows what next week brings, to really put things in an overdrive and build up the infrastructure to have multiple choices as far as customers. There's other people in the world that could use your resources. The one feather in your cap as a country right now is the LNG Canada project, which is imminently going to be transporting gas from Kitimat in British Columbia. You guys had a hand in some of the construction projects of the pipeline. You guys meaning Enterprise, of course. And now you're going to be having a major export industry there. Tell us a little bit about how you first got into that and how this project finally has come to fruition.
Well, obviously, we do have a few different divisions in our business, and of course some different services and that we provide to the producers and the builders. But the LNG Canada project, of course, we were just talking about it with some industry people here in the last few days, and it's 11 years in the making, because we just got some word that the first empty cargo LNG cargo ship is on its way to Kitimat. It's scheduled to dock on the 29th of June. We're the 16th now, so that's just not far away. So that will be first cargo. I saw a note from Canada's largest natural gas producer. He's a professional technical guy with that company, and he made a little note on X. I saw this morning that they started cool down of their first for this in preparation for this first load. So it's there was a lot of mystery going on about when we'd see first cargo. I mean, a year ago it was supposed to be Q1, and then it was
Right.
delayed to Q2. I mean, now there's no question. It's imminent. It's in the next couple of weeks. So there's some serious excitement, because this is such a needle mover for Canadian gas production, Canadian pricing, and of course, just for the Canadian economy and the public. I mean, this is Canada's largest industrial project by dollar size, and of course the type of revenue that it brings into not only the federal and the provincial governments, is just like I said, a needle mover. So where we're going with all of this is, like you said, we're in the recent years, I make note of now more than double the population of the world is situated in Asia, and many of these South Asian countries are second and third world countries, and they're going to advance their societies no matter what we do in the US, Canada, and the UK with all their, climate change agendas and the money we're just pouring into one bad idea after another. Up here in Canada, we're like 1.6% of CO2 emissions in the world, and we're spending, $500 billion on these ideas that, India and China are, building a couple of coal producing electrification facilities every week, and any reductions in CO2 that we're doing here in the manner that we're doing it just canceled out within days, and
Oh, for sure.
it's just the insanity has to stop. But where we're going here is the LNG. The global market for LNG for Canada, we're going to enter it for the first time. We have three other LNG projects. They're at different stages of construction, permitting, and what have you, that look like they are absolutely going to go the distance. I saw some notes that come 2029 to 2030. A third of Canada's gas production will be offloading into LNG to the world markets, and
Wow.
that is, LNG Canada is about 10% in phase one all by itself. So it's and of course they're looking to have a financial investment decision on doubling its production at LNG Canada by approving the construction of phase two, which is a doubling. So I think we're set here going forward, for Canada. And, when we talk about, renewables and the addition of energy and, solar and wind and what have you, and if you look at the scope of world energy demand, and it goes back to, 2 centuries ago, there was coal, and we were able to bring on oil and natural gas and the hydrocarbon wave, and coal never went down. It never displaced that. And today we're just adding on more energy sources. Nothing is canceling out or displacing the other. It's just being utilized at, any more power, any more energy that's brought onto the market is consumed. And I don't see, and I know you don't, many don't see this stopping in our lifetime. So that's kind of where we are today. And I think, Canada's place going forward into this landscape is a very, very good position.
Well, while you were talking, Des, I put a chart up on the screen that I've used a number of times, this particular one or a manifestation of it that shows this rapid upward trajectory of global overall energy demand going back many decades. And even when you look at the 2008 financial crisis, even when you look at the self-inflicted global recession and shutdown for a brief time over COVID 4 or 5 years ago, you need a magnifying glass to look at the blip briefly downward in energy consumption before we took right back off again. And I know I've mentioned to you, and I'm going to put in the show notes here as well, once again, as I did in my interview with Prairie Operating Company. They're a Northern Colorado focused producer down here, mostly oil. A link to Scott Tinker's work and website because he is one of the global experts. And he points out regularly in his consulting work, and he's very highly regarded. He is the last thing he is an environmentalist in the radical leftist manifestation of that term. He's a realist and he wants to help 2+ billion people on this planet who can't flip a light switch to turn on juice in their house, who have to cook their dinner over wood or dried cow dung or whatever the case may be. And, the big winners going forward as the world has ever more need for energy and 24/7 reliable energy, the two big winners are going to be natural gas and nuclear power. That is the policy position of this country. I believe it's ever more the policy position of Canada. That is now starting to be grasped in Europe, where even Germany, when it comes to nuclear energy, has dropped their opposition to nuclear in the EU. The World Bank can now finance such projects. And inevitably, you'll know that we've really come full circle when Germany itself says, you know what, we were wrong and stupid to virtue signal and say we're going to get rid of nuclear power and strip mine small towns for coal. I mean, who the hell does that anymore? Um,
Yeah.
so, and look, and where the natural gas part of that is concerned, you guys are even better than we are in the U.S. But between the two of us, there's a lot of minerals that we don't have full supply chains for. We're all dependent, as we all know from the headlines, on finished rare earth products, mostly from China. Um, Canada is less vulnerable where uranium is concerned, but still, you need to even have more enrichment up there, let alone here in the U.S. where we have almost none. But the one thing that we do have all kinds of, unlike pretty much anybody else in the world, with the possible exception of Russia, is natural gas. And that is one thing that we can burn ourselves and export. And I don't know what it is these days, Des. I know that the Henry Hub price for gas is 350, 360 or something like that in MCF in recent days. But, you're selling into an Asian market, and we are here in the US for that matter, where the price structure is radically higher than that. So there's all kinds of juice there to have very profitable export industries.
Hmm. Yeah, I mean, talking about the pricing worldwide, I mean, really, natural gas around the world is 4 or 5 times Henry Hub. I mean, I think really the anomaly is North American natural gas is the cheapest in the world.
Right.
Just the abundance of it and so forth. But the rest of the world is priced. Essentially, it's priced aligning with Brent. If you follow LNG prices, it follows Brent around. Obviously, there's spikes when there's some crises happening. I mean, we saw it in Europe and in the German situation. We saw it there when the Ukraine invasion happened. I mean, we saw it race up over $30 an MCF and higher even.
Yeah.
But when I looked at the Asian LNG price. Just here in the past few days, it was between $12 and $13 an MCF. Today, in Canadian dollars, our AECO gate here in Western Canada was just over $1 Canadian. So you can see the opportunity here for these producers that are going to be providing, natural gas stock to this LNG pipeline. It's a vast change in
Well, yeah.
economics for sure.
And it underscores the reasons why it's sensible and economic both to spend the kind of money that was spent on that whole
Mhm.
LNG camp. What are we up to $40 billion price tag now or something like that?
Yeah, it was the early numbers were about 40. Of course, it went past 40.
Okay.
But the what's might be nice for the listeners to know about the Canadian LNG. The majority or the bulk of LNG is produced in the Middle East, mostly Qatar, and of course your Gulf Coast in the U.S. and the west coast of Australia those are the two larger producers of LNG. Now, depending on what end of the calendar you're on, those are very, very warm places. Ambient temperatures in the Middle East. I mean, you're talking 55, 56 degrees C, 120, 130
Yeah.
degrees Fahrenheit. And then same thing with the west coast of Australia. And of course, for half the calendar, it's not a chilly place in Texas and Louisiana either, right? So these are ambient temperatures that are generally speaking very hot places on the earth. Well, in Canada, up the northwest coast, the temperature across the calendar, because it's on the Pacific Ocean and it's fairly north, that temperature barely moves much in range. And even in the middle summer months, it's a cool climate.
Sure.
Rarely finds itself over 78, 80 degrees. Rarely. And in the winter, it doesn't get minus 30, but it just stays in this little shoulder range and what I mean by that is that when you're trying to liquefy natural gas, it's a refrigeration process. So they're fighting these ambient temperatures, and the cost to do that, and the energy to create that refrigeration to get get natural gas to liquefy. It's a major cost of the resource. So our Canadian location costs are going to be very, very low because we're not fighting these massive ambient temperatures, as well as we're powered by nearly 100% hydropower. So it's
Yeah.
fairly inexpensive on the power side of it. So our Canadian LNG opportunities will be the lowest cost in the world. Not only that, our shipping time specific to, let's say, your Gulf Coast to the Asian markets is a 10-day shorter trip across the Pacific to those markets. So I'm just trying to get a little bit of a framework of the cost of making our LNG and shipping it to those markets. There's a little more margin in that ability to get it there, liquefy it, transport it. It's going to be a much lower cost here in Canada.
Super. Well, that's very helpful. And I sort of knew that, but it's better when you explain it all over again for me too, because I don't always think of that element of things, of how much more intensive it is to cool it down, because you need it cooler to be able to ship it,
Mm-hmm.
liquefy it, and everything like that. So remind me real quick, does the ownership structure of LNG Canada itself is, I know there's a few hands in this.
Yeah. So LNG Canada is led. The main operator, the leader in that is Shell Canada. So obviously a subsidiary of Royal Dutch Shell. Petronas, I believe, is the second largest at 25%. There is also Mitsubishi that you mentioned earlier is a sizable owner as well. I think just under the 25% mark, and also in there at lesser ownerships is Korea Gas
That's right.
and PetroChina.
Right.
So total of all in all, there's five partners. LNG Canada is the only domestic player, although Petronas, which is owned by the Malaysian government, it's the Malaysian National Petroleum Company. They do have a Canadian entity, and they are a producer here in Canada. So it's Petronas Canada. It's a division of the Malaysian Petronas company with its own. In fact, Petronas is in our top five largest clients that we service in the field.
Okay, cool.
Yeah.
And you mentioned too that there are going to be maybe not exact clones, but there are other LNG production and then export projects in the works to help
Yes.
to market more of your gas. So aside from that, aside from the cost and the other advantages, like you've pointed out, aside from the fact that generally speaking, Canada's energy patch and the companies in it are even more absurdly cheap fundamentally than those in the US, where energy is undervalued in this country too. What is it going to take going forward in your estimation? I want to start to wind down and look at, what kind of peer into the future. What do we need economically, and what do we need policy wise? I know that when you
Yeah.
and I have spoken before, that it's like any politician that makes a lot of promises and gets in office and may or may not keep those promises. There are certain things that Prime Minister Carney can get behind or do that will help people to say, all right, well, maybe he is going to be less bad. Maybe he is the right guy now to help to develop Canada's immense national wealth in the form of its resources, energy, and otherwise. What do we need to see? Because I know that generally speaking, and you've commented about this in your filings as a company and a commentary with them in the last several quarters now, that it's certainly a healthier energy patch in Canada than it was during those lean years. But what do you really need to put things into overdrive policy wise?
Well, those of us in the Canadian, energy sector, we're a little concerned that we haven't had any, direct addressing from Carney about some legislation that was put in place, 2018, 19 era from the Trudeau government. So we had what was called Bill C-69, which was a um, complete retooling of the Environmental Assessment Act when it comes to these projects that fall under the federal purview. Basically, C-69 was basically designed to exhaust any project into its into to giving up. I'll never forget. Warren Buffett, he had with Berkshire Hathaway had pledged $4 billion for the an LNG project here in Canada, but on the East Coast, it was in Saguenay, Quebec. It was called Energy Saguenay LNG, and he had pledged $4 billion, and over a couple of years. This new Canadian Environmental Assessment Act, it was one of the first projects that was going through this rigorous, environmental regime, and he ended up pulling his $4 billion investment in this. And of course, I caught him on CNBC on an interview. It wasn't about this particular issue. It was just a very general Berkshire Hathaway. But the interviewer said that he had noticed they'd pulled this $4 billion from this Canadian LNG project, and he asked for a comment. And Warren, with his diplomatic way, he paused for a second. He says, "Well, the Canadian regulatory regime is like a maze with no cheese," and
Yeah.
that is indicative of this Environmental Assessment Act, which today the industry, we've heard some talk from Carney about what he wants to do. He's purposely avoiding certain words and certain terminology, and that's got our hair up a little bit. But he hasn't come out and said what we need him to say, because we're asking him. These regulatory regimes are still in place, and they need to be repealed to get where we need to be on the development of energy infrastructure here in Canada. And he is unwilling to repeal C-69. We also had at the same era the Trudeau government C-48, which is the West Coast North Tanker Ban. So at the time, there was the Northern Gateway pipeline, which was going to take oil sands oil to the north in that Kitimat area, Prince Rupert, and they put this tanker ban on that north coast, and then Trudeau stroked off, just didn't. It just says this won't be approved. So we had a pipeline that today would have helped us in this tariff issue with Trump. We would have had more offload going to other markets than the U.S. We would have been in a much different position. But anyway, nevertheless, what I'm getting at is that we haven't seen Carney come out and say, we're going to repeal this, or we're going to restructure this. We're going to make. He's said a lot of other things. Here's the reality. Canada, like the US, like most OECD countries, we have large deficits and we're building large debt. It would be absolutely insanity if we didn't, develop these things that Canada is good at. We need to start fast tracking this, because we need the money, no different than any other OECD country. These governments are constantly in deficit, building debt, and we simply need the addition to the economy. We need the dollars into the treasuries of both federal and provincial. We need it all the way around. So I think pragmatically speaking, we think we're going to get there with some vigor. We just haven't heard it yet.
Time will tell. Well, you would
Time will
think, and again, I sometimes think that both Trump and Carney, in their own ways, individually and a couple of different times now, collectively, you're playing this kind of cat and mouse game with the public and with markets and stuff. They might have more up their sleeves than we think. But, if I was looking at this, from the perspective of a Canadian, I would say, get your butt in gear. And if you're really serious about we can't be hostage to the US and the whims of somebody like Trump, and we need to have other customers, well, then let's make them. You know what the steps are to do it. It ain't rocket science. You just pointed out a couple of them, and there's others. Do you get the sense, I mean, apart from Carney himself, Des, is there more of a broad sense in Canada? Maybe from people in the past who didn't care about this or who didn't care about development, or maybe were happy that the environmentalists were winning the day, even though it hurts your country and its economy. Are there those who are thinking now, you know what? Maybe we should develop these things because we don't want to be the 51st state.
Yeah. Well, I believe that's out there to a degree. I do think people are looking at this pragmatically. Not enough. We have many Canadians. Unfortunately, the people that are thinking pragmatically and are very much for building this infrastructure happen to be, obviously the majority out in Western Canada, but Western Canada doesn't hold the population. If any listeners understand our how we vote and how we get a prime minister in play is completely different process to what you have in the U.S. It's on vote night, we know who the prime minister is at 7 p.m. at night because, once the vote gets past Quebec and Ontario, it's over.
Right. Yeah.
So
Unfortunately.
and the folks that are making up that population, if you want to call it, in central eastern Canada, are disconnected from many of them are disconnected from the resource realities that we live in. And as we described right at the outset of this interview or this chat, is Canada is could be the richest country in the world. We can make Switzerland look like a little brother,
Right.
if properly. Developing the resources that this country has, it's unmatched in the world. What we have here, and like you said, outside of Russia, and that is waiting for the prosperity for Canada. I mean, we had Trudeau for 10 years. That was a government that prosperity or the economy wasn't even in their language. It wasn't on their top 10 list. It was a bunch of other things that were all seen through the climate change lens. So we've been ignored. The economy has been ignored, and we show it. We over the last 10 years in the OECD countries, we're second last in productivity and GDP. Second last to Luxembourg, for crying out loud. So we are in a not a very good position economically. We've scared away a tremendous amount of foreign investment by these these policies that will you can invest in some kind of energy project or so forth, and wait forever to never get an approval. So we're looking for Carney to change that, and it needs to happen. And in spite of all this kneecapping that the Trudeau government did over the last decade, Canada's production has inched higher, both in gas and in the liquids and oil and so forth.
Well, and as I pointed out earlier, I mean, you guys, a lot of companies that serve the oil and gas industry, when they were pulling in their horns and you were in a terrible bear market, and there was times bad enough with gas, but even sometimes with, Western Canadian oil, you could hardly give it away. And it was
Mhm.
bad times, and you guys came through that, and you've done very well since then, and been able to make a couple of more new accretive acquisitions. Like I said earlier, we're going to talk about Enterprise specifically in a separate discussion, not many days hence. But one quick takeaway, Des, before I let you go, on a scale of 1 to 10, I got to put you on the spot. What's your optimism for a year from now? Uh, how do you think that things will have improved on a scale of from 1 to 10 from what you see right now?
From where we are today, I think we will see some progress. I think we'll be a 5.5 to 6. So that's moderately positive, and I think that's going to come from we have a premier in Alberta that is doing all the right things to get everything we just talked about developing energy projects and energy infrastructure. She is doing absolutely everything to put the pressure on Carney and his cabinet to make these development opportunities show themselves, get them fast tracked. I mean, if they leave the C69 in place, we're kind of, and Carney's led on to it a little bit. If there is something in the national interest, they will fast track it. That's the best language we've got out of him here recently. And that's where my optimism lies. And it's because, Danielle Smith, the Premier of Alberta, is holding their feet to the fire every day. Very, very strong comments coming from her. And I think there will be positive response to that. So a year from now, let's have another chat, and we'll revisit this this footage.
Well, we'll keep in touch, that's for sure. And of course, I've followed her a lot, and her interactions with President Trump down here as well. And she's in a delicate situation right now because I think there would be more than the sufficient number of Albertans who would support a referendum on whether the province even stays part of Canada. I know she's got to stand up for those people and for the interests of the province, regardless of how people fall on that. But at the same time, I think if everybody had their choice, and one of the things I've always admired about Canada is there's a greater sense of unity as a country, though that has been hurt by these things recently, than we regrettably have here in the U.S. I've always admired that about Canadians. So we'll see what happens. But, the old saying is necessity is the mother of invention. You need a boost for the economy. You've got the tools and the resources staring everybody in the face up there. And so hopefully things start to turn up. So, and we will revisit this from time to time. So Des, thanks so much for your time today. And folks, stay tuned for an upcoming renewed look and profile at Enterprise Group specifically. Thanks, Des.
Cheers. Thanks, Chris.
Yeah.
We're glad you joined us today. As always, write to chris@nationalinvestor.com with your comments and questions. And be sure to visit yourmoneytoday.org if you haven't already. Sign up for our free alerts, notifications of new shows, and more. Thanks for tuning in, and we'll see you next time.